Welcome to Ms. Accounting Tutor's presentation on Petty Cash Journal Entries. My name is Mary J. Collins and I will be your host. Petty Cash is the account where businesses keep a small amount of physical cash on hand to pay for miscellaneous expenses that are paid in cash at the time of purchases. Receipts are made out for any cash spent from the box. Let's take a look at the basic components of a journal entry. You have the date column with the month and day. You have the account title and description, where you have at least one account debited and one account credited. Credits are indented. Then the third line is a short, concise description of the transaction. Debit means left, credit means right. You always start out with the debited account and then the credited account. They must balance. The following is the journal entry to set up or increase a petty cash fund. When you start a petty cash fund, you must put an amount of money into a cash box. This money will be withdrawn from your basic account of cash. When you increase the amount of money kept in the box, a journal entry must be made to take cash out of the cash account and place it into the petty cash account. Let's start with how to set up a petty cash fund. The date was January 1st, so we will do 1/1. Setting up a petty cash fund, so we will debit petty cash, which is an asset account, increases when we debit it. Then cash, of course, is an asset account. It will decrease because we're crediting it, taking money out of that account. The description: to open petty cash fund, the amount we're placing in the box will be $200. So we will debit petty cash fund, increasing it, and credit cash, decreasing that account. Journal entries to reimburse the petty cash fund. This type of journal entry is to replace the money you spent on small bills during the month. You must record as an expense what you spent the money on and replace the cash in the box. This journal entry is used when the cash in the box and the receipts added up to the exact amount in the petty cash account. On December 31st, so we'll do December 31st, then we had postage of $53, so we will have postage expense for the $53. Freight out, which is sending things to customers, will be debited to freight out for $45. Office supplies, the office supplies expense for $56.78, and miscellaneous, which will be miscellaneous expenses for $20.32. Cash, so we take the $200 we originally had in the box, subtract all of our receipts, and it equals 0 if we subtract the amount of cash that is still left in the box. And therefore that gives us the amount that we must reimburse or take out of cash and put back in the box. Notice that petty cash is not debited or credited when you're reimbursing the petty cash fund. To reimburse petty cash box. Now, the journal entry used when the cash in the box and the receipts add up to less than what is in the petty cash fund account. Same date. Then we will go postage expense. And then we'll do freight, which will be our freight expense. Office supplies. And miscellaneous expenses will be our last expense. But now, if we subtract all the expenses and then subtract the $22.90, which is the cash left, it will be $2 short. So whenever we're short, we debit that. And then we determine the amount of cash that we need to take out in order to replace the the amount, so it adds back up to 200. Cash and over and short can occur for many different reasons. A failure to add correctly, perhaps reimbursing the cashier from the front for some money that was inadvertently miscounted. So it is not uncommon to have cash over or short for the petty cash box. So the explanation is to reimburse petty cash box. Now, the journal entry is used when the cash in the box and the receipts adds up to more than what is in the petty cash fund account. Again, the date, and we will do postage expense, and then we will do freight out. Remember to always list these as debits, office supplies, because they are expenses, miscellaneous, and then subtract it. In this case, you get a negative amount because the amount in the box causes it to exceed. So you will have a $2 cash over. You'll place that as a credit. And then, of course, you will subtract to figure the amount of money that you need in order to replace the $200. Of course, to reimburse petty cash box. When management decides to increase petty cash funds, there are two types of journal entries that can be made. Either increase the fund at the end of the month when the cash box is reimbursed, or make a separate journal entry at the time management decides to increase the account. This journal entry is used when the cash box in the box and the receipts add up to the exact amount in petty cash fund account and the petty cash fund itself is increased. So you have the date, place it up under the date column. You have your expenses, which are postage, freight out, office supplies, miscellaneous, and then you have management increasing the account by $100. You're still going to determine that there's a zero expense or shortage or overage, and then you're going to add the $100 in order to determine the amount of cash to put in the box. This would increase the petty cash fund. This is the only time you will debit petty cash, is when you either increase the account or open it. And then the explanation, reimburse cash box and increase fund. Finally, if they decide to do it like later between terms before you're reimbursing, increase it, so you will just debit petty cash, credit cash to increase petty cash, and it's only for the amount they're increasing the fund. This is the only time you will hit the petty cash box. Now the links. Here's the link to the handout on petty cash fund journal entries. Here's the link to my website, which you can access with your username and password for CNM students. And that ends our presentation. Thank you and goodbye.